It was a Tuesday morning in March. I was having a good week. I'd won 4 trades in a row. I was up $1,200 for the week. I felt invincible. I felt like I finally understood trading. I felt like I'd figured it out. Then came the 5th trade. It looked perfect. The trend was clear, the entry was textbook, everything aligned. I entered with confidence. I knew this trade would win. This was the kind of trade that confirmed my ability as a trader. I was right. For about 3 hours, the trade was winning. I was up $300. I was feeling amazing. This was going to be one of my biggest winners. Then something happened. The price stalled. It pulled back. Just a small pullback, nothing major. But it stopped moving in my direction. I watched the pullback, thinking it was temporary. The trend was too strong. The pullback had to reverse. But the pullback continued. My $300 profit started shrinking. $250. $200. $150. I started getting nervous. This was my perfect setup, my textbook entry. This trade was supposed to win. But it wasn't winning anymore. It was approaching break-even. My stop loss was sitting 15 pips below my entry. It should hit. I'd set it appropriately. This is what stop losses are for. When you're wrong, they protect you. But I couldn't accept that my perfect setup was wrong. I couldn't accept that. So I did something I'd promised myself I'd never do again. I moved my stop loss. Just 5 pips. Further away. Surely the price would bounce. Surely I was right and the market was just testing me. The price kept dropping. My stop loss, which was now only 10 pips away, was approaching. I was panicking. This wasn't supposed to happen. My stop loss got hit. I closed the trade for a loss of $200. I'd gone from up $300 to down $200 in about 15 minutes. That $500 swing felt devastating, even though $200 was within my normal risk parameters. I sat there staring at the screen, feeling terrible. Not about the money, about my failure. I'd broken my promise to myself. I'd moved my stop loss. I'd let emotion override my plan. And that one broken promise spiraled into a disaster that lasted 4 months. The downward spiral begins. After that one bad trade where I moved my stop loss, something shifted in my trading psychology. I'd proven to myself that I could break my rules. Once that belief was planted, it grew. The next day, I took a trade that didn't quite meet my criteria. I told myself it was close enough. I was already off the path. Why stick to my rules now? That trade lost. Because it wasn't a valid setup. But instead of recognizing that my rule-breaking caused the loss, my trading psychology told me, your rules are too strict. So, the day after that, I took trades that were even further from my criteria. I was testing whether my rules were actually right or if I was just being too rigid. Spoiler alert, my rules were right, but my brain wasn't processing it that way anymore. After that first bad trade where I moved my stop loss, I took 18 more trades that month. I'd normally take about 8. I was overtrading. I was taking marginal setups. I was breaking my rules constantly. And each time I broke a rule and lost money, my trading psychology would twist the evidence. My rules failed. I need better rules. Never, I broke my rules and lost money. By the end of that week, my weekly profit of $1,200 had turned into a loss of $800. My 4-trade winning streak had turned into a 4-week losing period. But here's where it got worse. The losses created new psychological patterns. After losing money, I'd feel desperate. That desperation would make me take even worse trades trying to recover. Those recovery trades would lose more. The losses would increase the desperation. The cycle continued, spiraling downward. By the second week after that one bad trade, I was taking 23 trades per week. I was completely out of control. I wasn't following my strategy. I wasn't following my rules. I was just trading emotionally, trying to recover losses that were getting bigger. By the third week, my account had dropped $4,200 from its peak just 3 weeks before. 3 weeks, from $1,200 profit to $4,200 loss. I couldn't understand what was happening. My strategy was the same. The markets hadn't changed. My charts looked the same, but my results had completely deteriorated. And the worst part was that I understood exactly what was happening, and I couldn't stop it. I could see myself breaking rules. I could see myself overtrading. I could see myself spiraling. It's like being in a car that's sliding on ice. You can see the tree you're going to hit. You can see what's happening, but you can't stop it from happening. By week 4, after that one bad trade, I wasn't just struggling with overtrading and rule breaking. My entire trading psychology had unraveled. The first symptom was shame. Every trade I broke my rules on, I'd feel ashamed. I'd tell myself I was weak. I'd tell myself I lacked discipline. I'd tell myself that other traders wouldn't have this problem, only me. This shame created anxiety. I'd wake up anxious about trading. I'd go to bed anxious about my losses. I was constantly stressed about how much money I was losing. The anxiety made the trading psychology worse. Anxious traders make worse decisions. Worse decisions created more losses. More losses created more anxiety. The second symptom was hopelessness. After losing money for 3 weeks straight, I started believing I'd never be profitable. Maybe I'm just not cut out for trading. Maybe I should quit. Maybe I'm a failure. Hopelessness is paralyzing. When you believe you can't win, you stop trying. You stop executing your plan. You just react to whatever happens on the charts. The third symptom was self-judgment. I'd become my worst critic. You're an idiot. You knew better. Why did you break your rules? You're never going to succeed. You're pathetic. This harsh self-judgment didn't motivate me to improve. It demoralized me. It made me want to quit trading entirely. The fourth symptom was loss of identity. I'd started identifying as a failing trader instead of a trader who's going through a difficult period. That identity shift changed how I behaved. When you identify as a failure, you act like a failure. You take reckless trades, you abandon your plan, you prove your identity correct. By the end of week 4, I wasn't just struggling with trading. My trading psychology had completely deteriorated. I was depressed. I was ashamed. I was hopeless. And I was still overtrading, still breaking rules, still losing money. The moment of truth. At the end of week 4, I had an important decision to make. I could continue spiraling, I could quit trading completely, or I could try something different. I chose something different. I went back and looked at that first bad trade, the trade where I moved my stop loss. I studied exactly what happened psychologically. The trading psychology was clear. I had an expectation that the perfect setup would win immediately with smooth, profitable price movement. Reality didn't match my expectation. The trade pulled back. I couldn't tolerate the gap between expectation and reality, so I broke my rule, moved my stop loss to try to resolve the discomfort. That was the root. Not the bad trade itself, but my inability to tolerate the gap between what I expected and what was happening. I realized that every subsequent rule break had the same root. Expectation didn't match reality, discomfort, rule break. And I realized something else. I'd been approaching the problem wrong. I'd been trying to build more discipline. But discipline doesn't work when the root problem is expectation management. I needed to change my expectations, not build my discipline. So I made a radical shift in my trading psychology. I completely changed my expectations about what trading would look like. Old expectation? Perfect setups should win immediately with smooth, profitable price movement. New expectation. Even perfect setups might pull back, might chop, might do anything. Trades don't care what I expect. Old expectation. If I follow my rules, I should win most of my trades. New expectation. Even following my rules perfectly, I'll lose about 40% of my trades. That's normal. Old expectation. Big winning streaks prove I'm a good trader. Big losing streaks prove I'm bad. New expectation. Trade outcomes are noise. What matters is following my process. Old expectation. I should feel in control during trading. New expectation. I should feel calm during trading regardless of outcomes. This shift from outcome-based expectations to process-based expectations changed everything. How I took control back. Once I'd identified that my problem was unrealistic expectations, I could design solutions. Solution 1, the reality statement. Every morning before trading, I'd write and read, "Today, my setups might lose. My perfect analysis might be wrong. The market might move opposite my expectation, and that's completely normal and expected." This statement prepared my mind for reality, to reduce the shock when things didn't go as I expected. Solution 2, the outcome detachment. I completely changed how I evaluated my trading. Instead of measuring success by wins and losses, I measured success by rule following. Did I enter only valid setups? That's success, regardless of outcome. Did I manage my stops according to plan? That's success, regardless of outcome. Did I size positions correctly? That's success, regardless of outcome. By detaching my success from outcomes and attaching it to process, I removed the emotional roller coaster. Solution 3, the loss acceptance ritual. When I took a loss, instead of blaming myself or spiraling, I'd write, "This loss was expected. My strategy expects losses. This loss is data. I learned something. Next trade." This ritual prevented shame and hopelessness from taking over. Solution 4, the identity protection. I stopped identifying as a trader being tested by losses. I identified as someone executing a process. These are different identities with different behaviors. The first identity, when tested, you break under pressure. The second identity, when executing a process, you follow the process regardless of results. Solution 5, the expectation reset. Whenever I noticed myself forming expectations about how a trade should move, I'd pause and reset. This trade might go up or down or sideways. I don't control the outcome. I control my execution. This reset prevented expectations from building psychological pressure. The recovery and transformation. Implementing these solutions didn't immediately fix everything, but within a week, I noticed dramatic improvements. By end of week 1 of the new approach, my emotional state during trading was calmer. I wasn't stressed anymore because I wasn't tied to outcomes emotionally. By end of week 2, my rule breaking stopped. When I stopped forming expectations about what should happen, I stopped needing to break rules when reality didn't match expectations. By end of week 3, my overtrading stopped. I took my planned 3 trades per day instead of 23. My trading psychology had stabilized. By end of week 4, my account started recovering. Not from lucky wins, but from better execution because I wasn't emotionally spiraling. After 8 weeks of the new approach, I'd recovered about 60% of my losses. I was back to consistent profitability. After 12 weeks, I'd not only recovered the losses, but surpassed my previous peak. My account was at its highest level ever. But more important than the money, my trading psychology was completely different. I was calm during trading. I wasn't stressed about outcomes. I was focused on process. I was executing my strategy with discipline because I'd addressed the real problem: unrealistic expectations.
The key insight. Looking back at those 4 months after that one bad trade, I realized the key insight. One bad trade didn't cause me to lose control. My reaction to that bad trade caused me to lose control. Specifically, my reaction was this: this perfect setup shouldn't have lost. When reality didn't match my expectation, I couldn't tolerate it, so I broke my rule. That one rule break opened a psychological door that I couldn't close. Once I'd proven to myself that rules could be broken, I kept breaking them. Each break was driven by the same root cause: expectations not matching reality and my inability to tolerate the gap. Fixing the problem wasn't about more discipline, it was about realistic expectations. Once I accepted that even perfect setups can lose, that trading includes losing trades, that outcomes are outside my control, the rule breaking stopped naturally. The trading psychology shifted from, I need to control outcomes and break rules when they threaten to fail me, to, I need to control my execution and accept whatever outcomes result. How you can avoid the spiral. If you're experiencing what I experienced, one bad trade triggering a downward spiral, here's how to avoid it. Step 1. Identify your broken expectation. What were you expecting to happen that didn't? What gap between expectation and reality triggered your first rule break? Write it down clearly. I expected this, but this happened instead. Step 2. Question the expectation. Is your expectation realistic? Do perfect setups always win? Do you always follow your rules perfectly? Does the market care about your plans? Probably not. So adjust the expectation to match reality. Step 3. Shift to process focus. Instead of measuring your trading by outcomes, measure it by process execution. Did you follow your rules? That's the only success metric that matters. Step 4. Accept losses as normal. Create a simple statement. My strategy includes losing trades. This loss is expected and normal. It doesn't mean anything about me or my ability. Repeat this statement after every loss until you genuinely believe it. Step 5. Protect your identity. Stop identifying with trade outcomes. I'm a trader who lost today becomes I executed my process today. This subtle shift prevents one bad trade from triggering identity crisis. The bottom line. One bad trade where I moved my stop loss spiraled into 4 months of losses, overtrading, and trading psychology chaos. But the bad trade itself wasn't the problem. My reaction to it was. My reaction was driven by unrealistic expectations. When reality didn't match my expectations, I couldn't tolerate the discomfort, so I broke my rules. That one rule break opened a psychological door that I couldn't close. Once I'd proven to myself that rules could be broken, I kept breaking them. Each break was driven by the same root cause: expectations not matching reality and my inability to tolerate the gap. Fixing the problem wasn't about more discipline, it was about realistic expectations. Once I accepted that even perfect setups can lose, that trading includes losing trades, that outcomes are outside my control, the rule breaking stopped naturally. With realistic expectations, I stopped needing to break rules. With realistic expectations, I stopped spiraling emotionally. With realistic expectations, I took back control of my trading. You might be experiencing something similar right now. One bad trade, one rule break, and now you're spiraling. If so, know that you can take control back. Not through more discipline,
through more realistic expectations. Accept that trading will disappoint your expectations sometimes. Accept that losses are normal and expected. Accept that your perfect setups don't always work. Accept that outcomes are outside your control. With these realistic expectations, your trading psychology stabilizes. Your discipline returns naturally. Your control returns. The question is, will you adjust your expectations? Will you stop trying to control outcomes? Will you focus on process and accept whatever results come? Your trading depends on your answer. One bad trade almost destroyed my trading career, but it taught me the most important lesson. Control what you can control, your process. Accept what you can't control, the outcomes. Do that, and you'll never spiral from one bad trade again.